Alright, so this video is on the YM. I'm gonna apply some Wyckoff concepts on it. So what happened here is, in my prior video I talked about reaccumulation, blah blah blah, and then it went up here, and then eventually broke. A key thing in the Wyckoff method is ability to read volume. And as you can see, we had a break. It's very clear price broke and there was high volume. It was a high volume break, and it was a very clear break. It took out multiple lows. Okay, it took out multiple lows, and it had follow through, meaning a lower low. So now you're ready to short. Now the signal, well, you need a trigger. Even though you know it's bearish, you need a trigger. The trigger is really this break right here. This is a markdown bar, and you have another markdown bar. But what you need to understand is what's going on in the middle is that this is effort reward. This is one example of effort reward. Now how do you know it's effort reward? Is when you have a lot of volume. And it doesn't make a lot of progress, as well as some type of confirmation. So the way I do it is I compare the two waves. Here I look for a lack of demand or a lack of supply, and that's signified by 1 bar. And here you look for a lot of green bars, but they really can't make progress, and there should not be more than 1 close above the high. Alright, so 1 bar followed by many bars that is unable to make much progress above the high. Again, 1 bar followed by many bars that is unable to make progress above the high. This fits the bill. 1 bar. And what's really nice about it is when they take out the low, it needs to, effort reward, you want it to take out the low of the 1 bar, and then many bars up, but it's unable to really push price up. There's a lot of volume, 62 volume relative to 14 volume, yet 62 is unable to make much progress, even though it's 4 times as much, right? So the thing is, you have your signal here, which is a thrust. It comes again here. Now how do you confirm effort reward? You only confirm effort reward, in my opinion, after the low is taken out. The confirmation always comes after the high is taken out or the low taken out. Here I get the markdown bar, and now you have markdown. Now I don't know how low it's going to go, because in the options market towards the end of the day there was a lot of call buying in the SPY, which leads me to believe there might be a run to test this area, this gap area. So I don't know what's going to happen, but for the moment it gave a really a nice trade of about 100 ticks. Alright, so let's go and mark this up according to the Wyckoff principles. I did this yesterday, so I'm not doing it again. High volume, this low volume. Why is it low volume? Because only 1 bar, typically 1 bar have low volume, but I mean, you get used to the numbers. So after that you have effort reward, and this is really important. This is really important when you have 2 low volume. You have low volume followed by low volume. What happens is, I'll explain this. You have low volume followed by low volume, which is a retest of low volume. You got low volume followed by low volume. The second is a retest of low volume. And if you're a Wyckoff student, there's a really important lecture that was done by Bob Evans from Wyckoff SMI called The Bridge Story. A bridge has at least 2 points of support. That's how you know it's firm. Similarly, you always look for 2 points of support before a breakdown in order to sell. This is 2 points of resistance. This is 2 points of resistance. You know that then when it breaks, it makes a firm break, meaning it has those 2 points before it breaks. 1, 2, then breaks. This is the bridge story. So anyway, the point here is this high volume in the Wyckoff method. You know, there's a change of behavior, or what they call a sign of weakness. This right here is low volume effort reward, and this, you know, in my opinion, this or this would be called your LPSY. And then, you know, this you get the triggers. The triggers, in what I think are the triggers, are thrusts, thrusting bars. So this bar is the thrust, but you have to consider it from the close, not, you know, you have to include the gap. This bar is really much bigger. It's all the way up here. It's not high to low, it's high to the prior close, because it gapped down. So this is a big bar. And then you have effort reward and a break, and for some folks, they like to see the what? The upthrust. Upthrust, they come in many forms. The point is, it's a slight penetration of resistance, and it goes right back down. The fact that this was a thrust confirms. It confirms the upthrust. You want to see a slight penetration of resistance and immediate selling. That immediate selling is confirming the upthrust. And if you know what a spring is, that's what you want to see on a spring. A slight penetration of support and an immediate buying. You know, a slight penetration of resistance and immediate selling, as indicated by price action, by the thrust, a bar with big range, especially a low end close. So after this, you take the short, you know, wherever you want to short. I actually I tried to get it here, but I missed it. It went right over here. And then this move is 747. It's gone over 147 ticks. So this was a really nice opportunity. So there's your Wyckoff here. Next market is the crude. I talked about this probably yesterday. The same concept of effort reward occurred. One bar. This effort reward is a little bit different than time-based bar charts. In tick-based bar charts, you know, you could compare effort reward based on waves, not just based on one bar with heavy volume and small spread. That's just more traditional. This effort reward is a little bit different. It's based on waves of buying and selling. So you have one bar. I went through this yesterday, I think. But this is your sign of weakness, lack of demand, thrust, follow through. You know, after that, you had this one bar, takes out the low. Remember, one bar takes out the low, and then multiple bars up that are unable to make much progress. Over here, you had one bar, low is broken, second wave up had two bars, 59 volume is more volume than 27, yet it can't make progress. It can't take out the 27. It can't go above it. Even if it went above it, if it went right back below it, that's really good. That means that, you know, it ran a couple of stops or whatever. So here, this is very clear effort reward, very clear. You got 27 up, then 59 up that could not go above the 27, and then what? A thrust right down. That is telling you the market's going to go lower. So again, you got your sign of weakness. This was your LPSY followed by a thrust. The thrust is the markdown bar with follow through. Then you have one bar up. Take out the low. Attempt to go higher on 59 volume. That 59 volume is unable to go above the 27. All that effort is not producing a reward, and instead it is followed by a key reversal, a thrust, a thrusting bar down, and that tells you that price is going lower. This is the principle, the Wyckoff principle of effort reward. So what is the current state of the market? It's getting really interesting here. Over here, you know, price goes down and then it comes up, and you got 91 volume. Why is this interesting? 91 volume is the biggest up volume in all the up waves. Okay? Since this, it is the biggest volume, and it's coming from the lows. Now after the 91, you have 121, and the 121 did not take out the low. There's more volume, but it didn't take out the low. Now I don't know if this is bullish yet or not, you know, whether, you know, what's going on. So here is the thesis. Thesis right now is it's bearish, because the trend is down. What are you waiting for? You're waiting for sideways movement and for volume to dry up. If it doesn't dry up, for sure this market's going to go down. If it dries up, then you want to see the rallies on the long side get bigger and stronger. Okay? So this is short-term markdown. I like the quality of this wave because this quality of this wave has thrusts. Always like the thrusts. Yeah, thrust here, but you know, one wave doesn't mean jack, especially if, you know, they just took that 91 and dumped it. So we'll find out what, you know, what this volume means. Is this some type of effort? Again, effort looks like this. In my opinion, that's how effort looks. And I've seen a lot of charts, and I know this is how it looks. Over here, I don't really see the one bar, and then, you know, multiple bars can't take out the one bar. It's not effort. Only question is it what is it? And you don't know until the market tells you, until it shows its colors, and right now it hasn't done that. So you have to remain bearish. So that's the take on crude. For the euro, you know, it's in a downtrend. The averages are converging, and you might have a test. What's interesting is pulled back on 38 volume and was taken out. So this effort didn't give a reward, and that's what's giving rise to all of this. I don't see any signal, although you gotta mark this. That's very little volume. If this thing thrusts up, it has a shot at testing the highs. Okay. Again, this was the sign of weakness right here. And that, remember I explained that low volume followed by low volume? Very important, because that is the retest. Low volume followed by low volume followed by a thrust, which gave you some down movement. You know, it may, you know, price may go up back and go right back down, but this was this at this point, supply is in control. For sure, supply is in control there, especially with the follow through bar. Now it didn't make much progress. I don't know why. Probably because all that Brexit, and I don't know. So we'll see how high this goes and whether they're going to do a stop run above this area. There should be stops above this area right here. So we'll see if it goes high, takes out their stops, you know, and then just reverses down and collapses. Other markets aren't really that interesting. You know, you have gold, and this shit's been on a tear. I have no idea how to deal with this right now. It's just uptrend for, you know, for rally high, rally high, rally high, rally high, and now it's consolidating. Is there any cause for weakness or concern here? Not really. Although there is one indication that there may be something might be brewing, but I don't really see enough. This volume is 13. This volume is 20. If you combine that, that's 33 volume. Is that enough? I don't know. Is that enough to cause a pullback or a downtrend? May cause a pullback, but I'm just waiting. Next is the Japanese yen. Yen is also a monster. This is all because of the Brexit situation. Going up, 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 up. It's just grinding up. All moving averages are up. There's nothing you can do. So don't. And I don't want to buy the pullbacks in them either, because they're really overextended. And I just don't see any turning points. And then finally, the Treasury notes. Another thing, and you know what? I'm not really sure if it's because of the Brexit thing, because all these markets, they broke out the day the bad unemployment report came out. That was the day that all of these risk-off markets, yen, gold, treasuries, this was all NFP or some report came out. In any case, that caused the impulse, and now it's just moving up, 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 up. This interests me, 65, because it looks like it's some type of shortening of the thrust, and they're having trouble, but I'm not really sure. And there's no evidence of selling whatsoever. Look at this, big green. It's dominant. Like there's nothing else that can compare on this. Big green, my man. It just keeps on going. And so that's the market review for. I might cover a little bit of point and figure. Point and figure. Maybe I'll do that tomorrow. Alright, thank you. Bye bye.